Hey everyone, welcome back to another portfolio update video. The portfolio is currently sitting at $6,086.41. You can see that all time we are up 1.44% or $86.41 on the account. And as you guys know, I started it on my 18th birthday on May 31st, so that's pretty great progress for the first 2 weeks. We've got tons of options plays to go over here, including a debit spread, which I'll talk about later. And also some of our stock positions that we've been dollar cost averaging into have gone up quite a bit, so we'll talk about that as well. So to start off, we have two weeklies here. We have two contracts on ChargePoint, one on NEO for this Friday. We also have a semi-monthly. We have a 714 ChargePoint contract, cash secured put at the 750 strike. Then we have a ton of 45 DTE contracts. You can see we have one on Labu, NEO, Plug, and SoFi. And lastly, we have a SoFi debit spread that expires in 2025. So now we're here in the portfolio spreadsheet, and I just want to go over the month of June so far. You can see we've had a ton of contracts expire completely worthless this month so far. These have all been weeklies. As you can see, these are all the weekly type. So I ended up closing a set of contracts that I opened on last Monday. I closed them on around Wednesday, I want to say, early for $1 each. So I basically closed them for a full profit, and I ended up rolling out to this Friday's expiration, these are the current contracts that I have in my account for weeklies on ChargePoint and NEO. I also ended up rolling this Labu put contract. I sold one, if you remember, at the 450 strike on Labu, and I pretty much made all the premium on that, or at least the majority, to a point where I wanted to roll up and out. So I rolled up to the $5 strike, and I pushed it out 2 more weeks to the 28th of July. On top of that, since the last video, I opened up a 45 DTE cash secured put on Plug at the $7 strike, as well as another 45 DTE contract, this one being on NEO at the $7 strike. And you can see here in my portfolio, both of these contracts, these 45 DTE contracts that I opened last Monday, are already up more than 50% each for a ton of premium. And here in my equity, you can see they still have quite a lot of equity left in them, so I'm just going to let them decay a little bit more, and then I'll probably roll out or roll up. We'll see. We'll see what we want to do here, but for now I'm just going to let these decay away. Past that, we have our stock positions. If you remember in the last video, we had bought an 1/8 of a share of TQQQ and an 1/8 of a share of UPRO. Last Monday, I bought another 1/8 of a share in both, and you can see that our positions are up 13% on TQQQ overall and 8.34% on UPRO, which is absolutely insane. We're going to continue to buy probably an 1/8 of a share every single Monday going forward. But yeah, I just thought that was kind of crazy. I only have $10 of equity in TQQQ. As you can see here, market value $10, but you can see I've already had an entire dollar return on just $10, which is absolutely insane. This wasn't really part of the plan. I'm just kind of trying to dollar cost average into this long term. So we're just going to continue to do that. I'm sure we'll have a pullback here soon, which I'm expecting. So this isn't really too significant, but yeah, I just thought that was interesting. Past that, I want to talk about this SoFi 1215 call debit spread here that you can see has an equity of $59. So this is a call debit spread, which I've never done on this channel before, but basically what it is I bought the $12 call on SoFi and I sold the $15 call at the same time to create that debit spread. I initially paid $56 to enter this spread, and you can see it's currently valued at $59. And here's that same spread pulled up in Options Profit Calculator. This is just a way of charting out your profitability over time. It includes theta decay and basically everything you need to see at what price, by what date, what will my option or spread be worth. So here's that same spread pulled up in Options Profit Calculator. And like I said, I had an initial cost of $56, so that's a debit of $56. And the max return I can actually get on this is $244, so that's about a 5x return on my money. And the reason why I opened this is because I'm very bullish on SoFi, but obviously as of right now, I really don't want to buy shares of SoFi at such a high price. They're currently at about $8.50. So instead of buying shares at a higher price, I'm looking to open these debit spreads, these long-term debit spreads, because I believe that SoFi is looking to get profitable by the end of 2023, probably end of 2023, early 2024, and I think just like Palantir, when it becomes profitable, it'll have a huge run-up just like Palantir had, and so I'm hoping to capture some of that upside by using a debit spread, which is super cheap to open but has a huge upside return. And like I said, if they become profitable, during this year, which is all the way here in the chart, then in 2 years down the line, it's very likely that their share price will easily be much higher than it is right now. So I'm basically betting on the share price being around $15 in 2 years' time, which I think is likely to happen. And if that does indeed happen, then we will get $244 for a $55 spread. So I thought it might just be a nice little thing to open on the side. And that becomes even more reasonable when you look at the fact that I just got paid, let's see, I got paid $17 to sell a put on SoFi recently. So if I just sell 3 put contracts, 45 DTE put contracts, and they expire worthless, then I basically already paid for that spread entirely. So if that spread happens to go worthless, then I'm totally fine with that. So if that spread goes to 0 and doesn't end up working out, I'm fine with that because I've already sold enough puts to basically cover that initial cost. So it is kind of a little bit like a gamble play because it's not sure to work out, but I'm okay with it because I know I can pay back that initial debit by just selling puts on SoFi like I'm already doing. But yeah, so that's the portfolio update this week. As you can see, tons of new options plays. That single debit spread, which I'm probably not going to open any more of these. This is more of just an experiment, and we're already up 5% on that, which is kind of cool. But going forward, I'm just going to keep rolling options, keep selling options at prices I want to buy stocks at. That's the mentality you got to have. Sell puts far out date-wise at prices you would really like to buy the stock at. Just let them expire in the money, worthless, whatever it may be. And over time, I'm going to keep dollar cost averaging into these leveraged ETFs. And yeah, that's pretty much the plan. When it comes to margin, I'm actually not eligible for margin at this time, so I can't get the margin money like I was hoping. Hopefully a little bit down the line I'll be able to get margin abilities, but for now I'm not going to be able to have that. So we're going to have a little bit of a less return than I hoped over time. But honestly, any positive return is good with me. As you guys know, I struggled in the TD portfolio to get any kind of positive return. So starting out with an $86 positive return in the first 2 weeks after not being profitable for so many months on TD Ameritrade is very welcome, and I love that, so I'm fine with this. But yeah, that's all for this week's portfolio update video, and I'll see you in the next one.